Hello, and thank you for joining us on this short video related to pricing strategy and how that can unlock business potential. A few quick words on pricing. First of all, pricing can have a big impact on the financial performance of a business. A small increase in price implies the business will derive more revenue from the sales of its products. And usually that price increase doesn't involve any additional expenditure, which means that the entirety of that new revenue goes straight to the bottom line. That's a good thing. Of course, there's a risk that your customers will say, we no longer want to buy from you because you're too expensive. And that is why pricing strategy is really important. And yet, many businesses continue to operate without a pricing strategy. Let's look at some factors which might influence price and your long-term strategy. First of all, we might think of our pricing based on our costs of production, our costs of delivery. Because if we understand those costs really well, we can set our prices at a place which ensures that we will be profitable on every sale. That sounds very obvious. But we also have to think about our pricing and our products in the context of the market. We are probably not the only business supplying our customers. Maybe we are a mid-range business. We are an average business in terms of how our quality is perceived, and that will influence price. Maybe we're a premium provider, in which case we can probably command a higher price. Or maybe we're perceived to be a discount provider, in which case our price will probably be lower than the average. We really need to understand this. And another factor which influences price is taking a long-term view of our customer relationship. Many businesses will sell to customers on a number of occasions. It could be every day in some cases, or it could be once a year. But we might want to look at the relationship over the lifetime, and then we may be less sensitive to the price that we get for every single transaction. More factors which influence price. We can modify our product, perhaps to make it more exclusive. Perhaps your product involves imported materials which are very difficult to get. Or maybe you compete in a market where there's scarcity. We cannot always get enough of what we sell. So we can therefore command a higher price because of that scarcity. Some businesses will bundle their products. They will sell multiple products in one batch because the customers perceive that to be more rare, more scarce, or more exclusive. Another thing we can do with our products is on the cost side. You may have customers who are used to buying your product, but also enjoying a very high level of service. That's great, but maybe that service provision is costing you a lot of money. And if you reduce the extent of your service, you may be able to reduce your prices. That'll make customers happy. Another unique factor that we might consider is seasonality. Did you ever buy an air ticket around a holiday weekend? You would expect that to be much more expensive, right? Or perhaps you try to buy a ticket for a Broadway show hours before the production, and it was very expensive. But you know what? Minutes before the production, it might be much less expensive. That's because of timing, and some markets have those kinds of unique attributes. One thing about pricing is to consider payment. Would you rather receive $100 today for the sale of your product, or $1,000 1 year from now? That'll depend on your liquidity situation and other factors. Maybe you really value getting the cash into your business now because you need it. Or maybe you're willing to wait a year for a much higher amount. It'll depend on the circumstances of your business. So payment terms do have an influence. And our customers are interesting. They sometimes have certain perceptions or thresholds regarding price. Why is it that many things are sold for 99 cents or $19.95 or $99.50? Why is that? Because there is some threshold in the minds of certain customers which suggest that that is much less expensive than, for example, $100. And another pricing strategy is to consider discounting. Buy one, get one free is an example of that. Maybe sudden flash sales, which get people excited about buying from you, or entry-level pricing, where we invite people to work with us at a much lower price, knowing that we will escalate the price in the future. These are some things which influence your pricing strategy. Final thoughts. Maybe we know the answers to all these questions, but maybe we should ask our customers what they value, how they perceive us relative to the competition, and what they are willing to pay. Let the customer's voice speak loudly as you consider your pricing strategy. And with pricing, keep it simple. We can get too complex with the various options here. Let's make it really simple for the customer to understand. And review your pricing strategy from time to time, because the market is changing, your customers are changing, the economy is changing, and that may mean that your pricing strategy needs to change also. We hope that's helpful and you can implement some of this in your business. Thanks for joining us today, and please join us for future videos. Bye.